Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, and let's figure out what in the hell is happening in this market. So with that being said, it looks like Tesla is going to be ending the day. Actually, this is showing aftermarket prices, so keep that in mind. It's a little bit inaccurate, but it will be ending at actually just above $200 per share, which is going to be up about I think it was 1.5% on the day. We're just going down a little bit after hours for whatever reason, maybe some earnings came out. But nonetheless, let's talk about it. Let's figure out what is happening and what we can expect moving forward. So if you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor, and my membership section on YouTube is live. The link is below if you're interested. For $3 a month, where I share intraday thoughts on Tesla, what and what not as it is moving. So most important thing right now to talk about is going to be this descending wedge that we talked about for the past couple of days. I think we started yesterday or the day before, I can't remember, but nonetheless, essentially this descending wedge that we are in. Right. This is the situation to watch. This is the thing to watch. This is the most important thing to pay attention to short term, because as we're still within it, this is, like I said, a bullish pattern, right? As you break out of it, which again usually happens to the upside, usually you break out to the upside and then you have a nice rally off of that, right? It's a bullish pattern overall. It's bearish while you're within it. It's bullish after you break out of it. So that's a nice little thing to see there, right? So as we break out, we'll talk about where I roughly think it can potentially go, but that's a possibility, right? Now, of course, this doesn't mean it's a guarantee. There's still a chance that it doesn't break out to the upside, even though that is the likelihood. We can still break down to the downside. If we break to the downside, that's where things will probably get a little bit uglier, and that's where most likely on the daily, you can see we'll come down to the overall 180s and touch that overall area. I don't know if you guys hear, there's a dog just barking outside over and over and over. Hopefully you guys don't hear that. But, right, so that's number one. Let's also talk about very quickly while we're on the daily screen, the Bollinger Bands, you can see wow, this is some ugly looking Bollinger Bands. You can see how, wow, this red is just crazy. This is just so spread apart. That's actually pretty wild. But nonetheless, we're obviously bouncing off the bottom of it, which is nice to see. But the thing I want to look at was actually the volume profile. You can see here, right, we're actually bouncing right off of a beautiful area of increased volume. So you can see we sliced right through. The second we broke this volume over here, we sliced right through this low volume over here, just completely crashed right below it. And as we entered the higher volume, once again, you can see we started stabilizing a little bit. And especially once we entered this higher volume all the way down here, which is where we're bouncing off right now, which is essentially around the mid to low 190s. And it's also fairly high once we enter the 180s as well. But that's roughly where we're bouncing at. And that's kind of what makes sense. And if we break above higher, you can see we're going to be re-entering that low volume once again. And of course, as you slice through it, you can slice through it both ways just as fast, essentially, especially with Tesla stock, right? It can crash and rally just as fast as it does the opposite. So never forget that. Tesla is a very aggressive stock and it's very, very volatile. So never underestimate its movement. Now, going back to the 65-minute chart here quickly, if we break to the upside, let's say this plays out the way it should. Let's say this bullish pennant breaks out to the upside, again, the way it technically should, right? Doesn't mean it has to, but it in theory will or should. Where do we go, right? So there's a few potentials here, right? First and foremost, what level does it need to break out, right? That's going to be this first question. 205, roughly 205, 206-ish, for two reasons. Number one, this was just an old support now to resistance. You can see these candles over here, right? Constantly bouncing off 205. So we're going to be going back up into that. So you want to not only break above that, just resistance in general, but it also lines up with the top of this kind of, line, if you will, or the top of this bullish descending pennant. Which is also around 205, right? So if we break above that tomorrow, let's say, or Thursday, I think it'll happen by Thursday. That's going to be the level to break for this to start, playing out and start looking like it's going to happen, right? That's number one. But let's say it does happen, and let's say it does play out. Where do we go, right? How far up do we go? So first and foremost, I'll be looking at is going to be this. On the daily, you can see we have the 200-day moving average sitting around 217 roughly right now, with the 21 EMA pretty much on its way to meet the 200-day moving average. Probably by the time we get up there, that'll be very, very close to each other, around 220. So that's going to be the first level, right? I guess technically the first level will be this 210 to 212 area, which we have plenty of resistance at before. I think if we break out of this pattern, we should break through that without too much issues, with the main one being, of course, these two moving indicators, which again will be around the 220s. If we break above that, I think 230s is next, which is where this candle over here, after that massive fall from earnings, did get kind of rejected at, and we started descending, right? And I think from there, this is what I have this overall drawing set up right now. We'll set up a potential cup and handle pattern, right? That'll look something like this that I have drawn out, come up to 230 roughly, same rejection as here. Then we start setting up the handle, which essentially is going to be like a mini bull flag, if you will, right? Because it'll look something like this, assuming, of course, this happens. This is all, of course, an assumption, but it'll look something like that, right? A little bull flag. And then from there, we of course set up the handle, zigzag through it like this, break out, and assuming this plays out like this, we break out, and then we, I think, can potentially go all the way up to even 255 or close to like low 250s. Let me explain. So first and foremost, right, we have the gap fill sitting at 240s, right? That's number one. Let's go ahead and open up the volume profile one more time. So we have the gap fill at 240s, right? That's where the volume, the thin volume ends and the larger volume starts to increase, right? The low 240s. That's number one, right? So that's gonna be a resistance point for sure. But on top of that, we of course still have this blue line that we broke under, which was that old massive channel. Remember that? I deleted it because I don't want to have too much clutter, I guess, but that was the old channel. This blue line was just the bottom of it. I just replaced it to make it look a little more simple, and that's all that really matters right now. But we still never really retested it, so that's what I wouldn't be surprised if we all the way ultimately come up to retest that blue line, right? And that, of course, let's say it happens around the middle of November, will coincide with the top of this channel that we are in right now, which is essentially potentially a bull flag on the weekly. You can see this bull flag right here, right? That'll be the red line, which will kind of coincide with this blue line as well. Double resistance point right there too. So, you know, wouldn't surprise me if that's kind of where we go to ultimately to retest and to, of course, get to the top of this ultimate bull flag slash channel, get a rejection, and from there we'll revisit it if it actually does happen like that. But those are the main levels in step by step that I'll be looking at, because as you break one, you unlock the next one, right? It's kind of how this more or less works. You can also take a Fibonacci and go from here to here, from the swing high to, again, assuming this is a swing low. And you can potentially look at it right here. So we have the 0.618 level sitting at 240, and we have the level above that, the 786, sitting at pretty much around 252, right? So those are the levels that you can also potentially look at as well. So just FYI. But those are the main things I'll be personally looking at. Again, I'm trying not to overcomplicate this too much, right? But that's kind of the main thing I'll be looking at, right? With the volume profile, that makes sense. If we break above this high volume over here, that's just barely above us, right? We slice through hopefully the thin volume, the moving averages over here as well, and then of course a retest of this blue line sometime in November. Wouldn't surprise me. Again, it's the best month for Tesla. It's one of the best months it's not the best month for Tesla, it's one of the best months for Tesla and the market in general, November specifically. So, you know, again, doesn't mean it has to play out like that. Doesn't mean every November will be bullish, or else it'll be like 100% obviously, but more likely than not, right? And so far, October being a very bad month for Tesla, you can see here, has played out yeah, pretty badly, pretty poorly. It was a pretty horrible month for Tesla. So take that into account and take that as you will as well. The Bollinger Bands, like we talked about, also looking pretty, you know, bouncing off the red line, extremely spread apart though. That's pretty wild to see. But those are the main things I'll be looking at. Now, taking a quick look also at options flow. Let me actually turn this off very quickly before I forget. Options flow, right? So interesting thing with options flow is the fact that that massive 3 million print is gone. That bearish print, it's no longer here. But in order, or not in order, but to kind of, I guess, make up for that, we have a lot of medium-sized bearish prints, right? We have one here, 1.1 million in premium, 195 put in January of 2025. We have 1.1 million premium here, 800, 1.3 million, 1 million again, right? A lot of roughly around 1 million prints coming in towards the end of the day, all fairly safe. Both of these are 280 puts. One is December of this year, then this one is January of next year. 1 million premium here, which is 216 puts. Right, we have 220 puts. Like, they're all fairly safe, fairly safe in the money puts. Some of them are very much in the money. My assumption here is that it's a hedge against FOMC coming up tomorrow. So take that for what it's worth as well. It's most likely a hedge. Again, with FOMC tomorrow and Apple on Thursday, that can definitely move Tesla in the market itself. So we'll see what happens there, but tomorrow should be an interesting day as well. But all in all, the main thing to look out for right now is just watching for the break above this descending wedge. Once this happens, I think something like this can potentially play out with this cup and handle pattern or something of the sort. But that's going to be the main thing I'll be eyeballing for the next couple of days, really the rest of this week, honestly. Yeah, and as it happens, we'll talk about it and go more into it. The VIX now, of course, also below 20, which is good to see for the bulls. The bulls definitely want to see the VIX drop below 20 as soon as possible. That is pretty ideal. So yeah, with all that being said and done, ladies and gentlemen, let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. And as per usual, I'll see you tomorrow. Peace.